zones is I like to use the, let me see if I can edit the EMAs here. Let me take off the 8 and the 5. I also like to use the 50 EMA and also the 21 EMA. And these EMAs are typically, for me, I like to use these EMAs for day trading only, to be completely honest. The higher time frame EMAs, like above the 10 EMA, when you get into the 20s, the 30s, the 50s, a lot of the market forces, they don't really play out as you expect with some of the EMAs, at least in my experience, on the daily time frame. If you're trying to swing using these long-term EMAs, for the long-term stuff, I like to focus on the moving averages instead, for swing trading at least. But if you're trying to day trade, right? So if you're looking at intraday, so let me pull up like a 5-minute chart here. When you're trying to day trade, the best moving averages are definitely the exponential moving averages. So I try to stick towards EMAs for day trading, and then for swings, I like to just use the 8 and the 5 EMA. But when I'm day trading, I like to use the 21 and then the 50 EMA like I have here on the chart. And obviously, one of the best ways you can use these EMAs is for the typical pullback entry on a price level. So if you want to focus on, well, typically when you're day trading, I like to focus on the 5-minute chart. You can also use the 1-minute chart, but the 1-minute chart is obviously a lot more inconsistent because, obviously it's very short term. So you can see that on the 1-minute chart, in some cases, you'll have price areas where you can use the EMA as a support zone, right? So if you look at the price level right here, where'd it go? Right here in this zone right here, you can see that historically the price bounced here once, twice, right? And then a third time here. So if you're trading this, right, if you're in this position right here, you missed your entry on this purple EMA, which is the 50 EMA, right? You have the price kind of come up, right? Obviously you don't want to chase. So what you do is you have to wait for, an entry at a support zone. And like I said, EMAs can act as a support zone. So if you're trying to maximize your risk to reward, you want to enter at the support zone. So what you would do is you would wait for the price to kind of pull back to this 50 area, this 50 EMA level. And the reason why these EMAs are kind of advantageous for day trading is because they obviously kind of move faster when it compares to regular moving averages. And day traders they're very sensitive to data, and it's very important for people to have their data as quickly as possible. So, if I was in day trading, if I was out of a position right now and I'm looking to enter this trade, I've noticed that, the market's very bullish, right? We are having higher highs and higher lows made in the market, and you want to play this long, you would wait for an entry at the 50 EMA. And it's typically one of the best pullback entry zones for day trading in my personal experience. And as you can see, if you waited for that entry, right, like right at this level, you see this green candle, this very long body green candle on the 1-minute chart close above this purple line. That could be my signal for an entry in this case, because the wider the body is of the candle, the more bullish it is typically.